Welcome back to Finance Frontier. In today's episode, we are diving into one of the most underrated yet powerful tools for managing credit card debt, that is balance transfers. If you are carrying high interest balances, this strategy could save you hundreds, sometimes thousands in interest and help you pay off debt faster. With interest rates still elevated in 2026, knowing how to use balance transfers wisely is more important than ever. Let's start with the basics. A balance transfer allows you to move debt from one credit card to another, ideally from a card with a high interest rate to one offering a low or 0% introductory APR. Think of it as pressing pause on interest. For example, if you have $5,000 on a card charging 22% APR and you transfer it to a card offering 0% for 21 months, you could save over $1,800 in interest if you pay it off within that promo period. That's real money back in your pocket. Here's how the process works. First, you apply for a balance transfer card, ideally one with a long 0% intro APR and a low transfer fee. Once approved, you request the transfer either online or by phone. The new issuer pays off your old balance, and now you owe the new issuer, hopefully with no interest, for the next 12 to 21 months. Most cards charge a transfer fee, usually between 3% and 5%, so it's important to factor that into your decision. And remember, the goal is to pay off the balance before the promo ends, because once it does, the regular APR kicks in, and you're back to paying interest. So which cards are worth considering in 2026? The Wells Fargo Reflect card continues to stand out with up to 21 months of 0% APR on both purchases and transfers. Citi's Diamond Preferred remains a favorite for its long intro period and no annual fee. Bank AmeriCard offers 0% for 18 months with a relatively low transfer fee. When comparing cards, always look at the length of the promo period, the transfer fee, the regular APR after the promo ends, and your eligibility based on credit score. Most of these cards require good to excellent credit, typically 680 or higher. Now let's talk strategy. To make the most of a balance transfer, you need discipline. First, stop using the old card once the balance is moved. Don't rack up new debt on the new card either, it's not free money. Set a monthly payoff goal that ensures you'll clear the balance before the promo ends. For instance, if you transfer $6,000 with 0% APR for 18 months, aim to pay around $335 per month. Automate your payments to avoid late fees, and track your progress with a debt payoff app. The key is consistency. Of course, balance transfers aren't foolproof. There are common mistakes to avoid. One is ignoring the transfer fee. It may seem small, but on a large balance, it adds up. Another is missing payments. Even one late payment can void your promo rate, and you'll be stuck with the regular APR. Some people treat the new card like a fresh spending limit, which defeats the purpose entirely. And don't forget the deadline. Once the promo ends, interest resumes, and you could end up worse off than before. So who should use balance transfers? This strategy works best for people with good credit who are committed to paying off their balance within the promo period. It's ideal if you want to simplify payments and reduce interest, but it's not for everyone. If you're still spending heavily on credit or can't afford consistent payments, it might not be the right fit. And if you're likely to miss due dates, the risks outweigh the benefits. Let's look at a real-life example. Priya had $7,500 in credit card debt spread across 3 cards. She transferred it to a Citi card offering 0% APR for 21 months. She set up auto payments of $375 per month and cleared the balance in 20 months. By doing so, she saved over $2,000 in interest, the key to her success. She stopped using her old cards, automated her payments, and tracked her progress weekly. It wasn't magic, it was strategy and discipline. So what's your action plan? First, list your current credit card balances and interest rates. Then compare balance transfer cards, look for long promo periods and low fees. Apply and transfer your balance, then set a monthly payment goal and automate it. track your progress, and avoid new debt. Balance transfers aren't a cure-all, but when used wisely, they're one of the smartest tools in your financial toolkit. Thanks for watching Finance Frontier. If this video helped you understand balance transfers and how to use them in 2026, hit like, subscribe, and share it with someone who's ready to ditch credit card interest. For more tools, calculators, and guides, visit Financial Hub online. Until next time, keep pushing your financial frontier forward.